Now, joining me for more on this, I'm joined in the studio by Taha Arvas, who's a financial columnist here in Istanbul. Thanks so much for joining us, Taha.
No problem.
Now, let me start by asking you, Turkey's central bank only raised 1 of 4 of its benchmark rates. Is this enough to counter inflation, would you say?
I think so. The important thing is, of those 4 rates, only one of them is being used currently. So almost all of the lending is done at the late liquidity window. And so the increase there was meant to stem inflation, like you said. And I think it will be enough because while some were expecting a larger increase, I think that they'll be happy with they have been happy. Markets have reacted positively to this. I mean, the Turkish lira did drop a little bit against the US dollar, but not by the catastrophic amounts that people were predicting.
So not that much of a difference, would you say?
No, I don't. I mean, there will be a change in inflation. I mean, the central bank's mandate is to keep inflation in check, but employment is also an important part of this factor. So what they've done is they've raised it enough to the point where they think that inflation will slow, but not overdo it so that that the cost of borrowing will be cost prohibitive to companies.
Okay, and we know that the government and the president are really keen to keep interest rates low, but Turkey's last quarterly growth was a staggering 11%.
Right.
So the question is, does this create a risk of a credit bubble?
That's a good question. Of that 11%, 7% of that came from household spending. The other 4% came from investments. So household spending, consumer consumption, is very important for Turkey. Just like the United States, something like 2/3, more than 2/3 of the total GDP comes from consumer consumption. So what the government wants interest rates to be low, as do most governments, because they answer to the people. There are elections, people vote on their records, and if interest rates are too high, then the cost of doing business is too high, your credit card bills are too high, and so obviously the people don't want that. So it's a delicate balance, but I think the central bank may have gotten it correct this time.
Okay, thanks so much for your time and for coming into the studio. That was Taha Arvas, a financial columnist here in Istanbul.